In this week's video, we wanted to take a look at all 4 of the major US indexes to see where they stood against their all-time highs. Also, first quarter GDP numbers were reported last week and they blew out expectations. And we wanted to take a closer look to see what drove those numbers to be the best first quarter since 2015.
Three of the 4 U.S. indexes were positive last week, with the NASDAQ leading the way up over 1.8% and still the yearly leader up over 22%. Now the S&P 500 was up about 1.2% and now is up over 17% for the year. Foreign and emerging markets were both negative last week, with emerging markets down over 1.5% and emerging markets now up over 12% for the year, while foreign markets are up over 13%. In today's charts, we're going to look at the 4 major US indexes in relation to their all-time highs. And the numbers I'm going to be going over here today are as of the close of business on Friday, April 27th. And it probably goes without saying, but the fact that these indexes are close to, at, or above the all-time highs is a good thing, as there's also no more resistance levels overhead. The blue lines on all these charts represent the all-time highs. And the only US index that made all-time highs so far is the NASDAQ, which is the first chart we're going to look at here. Now, as I said, there's no level to watch on this chart because last week the NASDAQ did make and held its all-time high. The next chart we're looking at is of the Dow Jones. And the Dow Jones is about 1.5% away from its all-time high at 26,951.81. The next chart is the S&P 500, and the all-time high on the S&P 500 is 2940.91, which is only 0.035% away from the closing value as of Friday the 27th. Now the S&P 500 closed on Friday at the highest closing level ever, but last week it did not actually reach that 2940.91 level, so that's something we're going to be watching for on the week ahead. The last chart is the Russell 2000, and the all-time high on the Russell 2000 is 1742.09. And unlike the S&P, the Dow, and the NASDAQ, the Russell is still over 9% away at 9.43% from the all-time high. And this is concerning because the Russell 2000, I've mentioned before, is one of the leading indicator indexes for the US markets. And the fact that it's 9.4% away while the other indexes are at or above the all-time high level is pretty concerning.
The major news story from last week was the great GDP numbers that were reported for the first quarter of 2019, as they came in at 3.2%, beating expectations by 1%. Now, we wanted to take a closer look to see what really made up the great GDP number in the first quarter. And as you'll see, a majority of this number was made up between trade, increased inventories, and government spending. What was completely missing from this number was consumer spending. So we wanted to take a closer look as to what's really going on with the US consumer. First, we wanted to look at the millennial generation, which is now the largest population group in the United States. And a study was released saying that 63% of millennials don't have $500 to their name to cover an unexpected expense. Now, most will brush this off as the stereotype that millennials just live for today. But we feel that's a lazy explanation, as this generation left school with an average of $34,000 in student loan debt. Also, they were entering the workforce during the financial crisis. And lastly, they mostly live in cities with higher cost of living and higher inflation rates than the rest of the country. The second thing that we wanted to look at is the debt situation for the average US consumer. And we wanted to do that by looking at the conference calls that major financial institutions were having after they reported their first quarter earnings. And what we've seen is that a majority of banks are starting to increase their loan loss provisions, meaning that they're worried about default rates in loans. So now taking a deeper look into loans, There's actually 7 million auto loans that are now technically in default, meaning that they haven't had a payment made in over 90 days. Also, we're looking at credit card default rates jumping up. And lastly, the US now has $1.3 trillion worth of student loan debt. And to put that into perspective, if everybody in the United States maxed out their credit cards, that would just be $960 billion. The last thing we wanted to look at was what was the actual percent of consumer spending that attributed to GDP in the first quarter. And it came in at 1.2%, which is the lowest in the year. And also, big ticket item sales were down 5.3%. So you can think of big ticket items as furniture, cars, and appliances. And that's the worst since the end of 2009. So it's safe to say the average consumer isn't contributing to the GDP growth in 2019 yet. This week we have some big players in the US economy reporting their first quarter earnings, such as Google, McDonald's, and Apple. Also, we'll start to get a glimpse in regards to big ticket spending as vehicle sales are reported as well.
Also, there's a Federal Reserve policy meeting this week that we'll be keeping a close eye on, because anytime there's one of these meetings, it's something that could always move the markets.
If you're watching on Facebook, please like and share our video, and if you're watching on YouTube, please like and subscribe to our channel.